years, what have you learnt that's changed how you approach the market?
I think as a person, you evolve because you get older. You know, you might be in a different stage in life. Your wealth is hopefully, you've got more money now than you had when you were 22, 23. So, you know, you are changing because you're just changing in life. For instance, now I take a lot less risk than I would have some years ago because I've got more money, I've got more capital, and I don't have to push that capital as hard as maybe I did when I was starting out. So it's very important, yeah, when people say, oh, I want to do exactly what you're doing. Well, are you the same age as me? Are you the same? Do you have the same capital? You know, everyone's on different cycles in their life. So if you imagine you go through some years where you're much more trying to accumulate wealth, and then I think as you get a little bit older now, you start thinking about actually you want to maintain the wealth, you want to look after it. Things like dividends, for instance. Dividend is where you earn interest on a share. When you first start out, you think, oh my God, dividends, I'm not bothered about those. But as you get older and you've got a bigger bank, the dividends become really important.
Do you have any stories or pearls of wisdom that you could share with our viewers?
I think, you know, what I started off, you know, I remember like with the stock market crash and a couple of weeks before when we had the big storms in the UK in '87, it was almost telling a sign. So I don't know whether it's superstition or whatever, but just be a little bit careful when natural disasters sometimes happen and then something happens in the financial markets. But I think, you know, the important things, yeah, there's lots of stories and whatever, it is just try to stick to some systems, try and stick to the facts, almost block out a lot of noise. It's very easy to be swayed. There's an interesting book written some years ago, it's called How I Made $2 Million in the Stock Market by a guy called Nick Davis. And Nick Davis was a professional dancer and he was traveling around the world. This is before internet days in the 60s. And he did really, really well. And then he came back to Wall Street and then he started losing money because he was trading tips and hearing too much information. So he was actually doing better whilst he was, you know, out in the field as such with less noise and just prices. So I think to a certain extent, sometimes, you know, just cut the noise down.